The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 17th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows for certain that each of us should be pioneers of our future versus prisoners of our past. Hope everyone out there had a fantastic weekend. Maybe you got an extra day off out there like we did here. Nice to be able to have a 3-day weekend out there. Hope everybody got a chance to watch that 40th anniversary Saturday Night Live. What a great 3 hours. A lot of great memories there. It was a great show. I thought that was a great show out there. Something that I'll watch several times, I'm sure. If you didn't get a chance to watch it, you should do that out there. And I haven't checked out that app that they've got, but that sounds pretty cool too. You know, where you've got all these different segments from throughout the years. And it's always good to have. It's always good to be able to have some laughter in your life. In fact, you got to make that a must out there. You got to especially make that a must if ever you're dealing with whatever troubled times out there. Always good to laugh. So. Hope everyone had a great weekend. I know I did. And, of course, let's make sure that you and I do everything we can to have a terrific Tuesday. And you know the easiest way to do that is to always remember that life happens for us, not to us. That's right. When we recognize that, what it means is that you and I can find the gift in every set of circumstance that the life is going to throw at us, that life is going to throw at us. And we know that's going to take place. In fact, we know when it comes to trading and investing, it's really all about the circumstance that the bulls or the bears throw at each of us each day, depending on the timing, your trading time frame that you're working with. It could be very often out there. Most importantly, though, I'm grateful for your presence here today. I'm here to serve you. That's right. Absolutely here to serve you. So feel free to give me a call, 877-927-6648. Internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. This is TFNN. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow futures are off about 7 points, so a flat market. They're trading at 17,974. S&P futures down a couple points, trading at 2,091. NASDAQ up 5 at 43.82. Russell's up a point. King dollar back 229 ticks. That's off 22 cents. Trade out of 94.05. Gold is back $5 right now, trading at 12.22. Silver off 61 pennies, down 3.5%. Trading out at 16.67. Light sweet crude back 60 cents right now. She's trading at 52.18. Let's take a quick peek across the globe out here. As we do that, we'll see that the DAX is off 32 points. No big deal out there. The FTSE is up 17. Let's go check in on the FTSE out here. That's really the important chart for us to be looking at because we're looking for signals with regard to what the market is going to do. What we know about the FTSE, that's been traveling in a 789-point, 13-month consolidation. If it is a breakout, and a breakout's going to be a close above, we'll use the swing point from September 4th. That high out there is 69.0486, so 69.05. Any close above 69.05. That says that the FTSE could be breaking out to a move of 76.64, maybe even more out there. At this stage, what we know about the FTSE, as I pull this chart here, explode this up just for you to take a look at, what we know is that price is stalled right here at its resistance, at its 13-month resistance level. That's at the 68.75. You're at 68.74 as we speak right now. So the FTSE is something both you and I want to be able to focus on and pay attention to. If we take a look at what went on over in Asia last night, you had the Shanghai. That was up about 25 points out here. We know in the case of the Shanghai, she's trying to tackle 35.37. That's its 0.382 retracement going back to 2007, I believe, out there. So that's going back quite a ways. As well as 36.55, that becomes another level of resistance. Once it clears both of those areas, then you're looking at a larger move, probably up to about 46.42 inside that indice. You are not there yet, but those are the hurdles that it needs to get through. In the case of the Nikkei last night, back 17 points. No big deal out there. The Nikkei here struggling with the 18,000 level. That is the swing point from December 8th. If, in fact, it can close above 18,030.83, do it with some conviction, wide-ranging bar, accelerated volume. That will give you an A to B equal CD price projection anywhere between 18,550 to 20,094. That's what's going on inside of that index. Let's finish this off by taking a look at the Hang Seng, up 58 points. Overnight, the Hang Seng up about 0.25%. Now, the Chinese markets here, they ought to begin shutting down, I think, tomorrow, Wednesday or Thursday out here in celebration of the Chinese New Year. It could have even been last night. I've got to go back and take a look at my notes out there, but it's going to be sometime soon out here. In the case of the Hang Seng, just consolidating up at these highs out here. It's trying to deal with its high from back in September. September 5th was out at 25,356 out there. Okay, so now to our markets. Where are we at in our markets out here? You know, I love all the emails, by the way. I love all the emails that you folks send to me. And I try to respond to each of them within about 24 hours. Love the conversations that I have, whether it's with counterparts, anyone that I might meet or see somewhere. And with regard to understanding what our markets are doing out here, I get people who look at the shows. Let's just say that I'm giving you what I believe are the charts that have a bullish outcome, and you happen to have a bearish outlook on the market. You're probably not too happy about what it is that I might say out there. Vice versa, if you're bullish and I say the markets are giving us a bearish outcome, maybe it is that you're not happy. And the question is, how can it be that I take a look at one set of charts and I see something that somebody else sees, something different? Here's the, and the question becomes, how do you answer that question? The easiest way, in my opinion, to answer that question is to understand that each of us throughout life have basically been pattern recognition specialists. I mean, it applies to whether you're raising kids, whether it's your business, whether you're making sales, whether it's the stock market. Look, if you haven't made that one of your focuses, you should. For me, I have. I began that focus back in the late 80s out there. Back in the late 80s, when I was in the retail business, I understood the difference between, it's all about location, right? And I understood that you could be off by 10 feet, and it could have a huge difference in the way that you would be the difference between major success, some success, or just total failure out there. And so I'm going to put an image up on my screen. Many of you probably have seen this image before, and it's important to understand this. I think it really helps to understand the how it is that we see things the way that we see them. So let me put this image up on my screen out here, slideshow. Let me see, begin from right here. How many of you, oops, that's not the slide. I mean, it's not that I don't want to show that slide. I don't want to even show any of those slides. What the heck is going on here? Thought I had this all figured out. I guess not. There we go. Let me see here. Let me exit from this. And let me come back to here from current slide. There we go. Okay. How many of you folks have seen this image before in your lifetime? How many of you, in fact, if you're in the Tiger's Den and you're watching, I'm going to ask you for some assistance. If you're at home, hopefully, if you're just listening to us on the radio or your mobile device at tfnn.mob, don't forget, come back and watch the archive of at least the first segment of this show. You can catch it on Channel 9 on Tiger TV out here. But what I'm showing you is an image out here. Now, this image, this image represents pretty much two images. Most people will look at this image on my screen and either see a beautiful woman or see what is the image of a witch. So my question to you, if you're in the den, you're taking a look at this. There is no right or wrong answer, by the way. So don't think, hey, because I see the witch, that means you're negative. If you see the beautiful woman, it means you're positive. It's not either of those. So which one? If you see a beautiful woman, just go ahead and type in a 1 inside of the Tiger's Den. If you see the witch, go ahead and type in a 2. But most people will look at this image, and what they will see is they will just simply see one image. If I tell them, and they're saying, hey, I see the beautiful woman, but I don't see the witch, they can look at this, and they can look at this, and they can say, I do not see the witch out there. Again, if somebody's looking at this and they're focused in on this, there's others that are seeing the witch, and they cannot see the beautiful woman no matter what. You see, what we see in life, what we see in a stock chart, what we see with regard to patterns are those things that we want to see. So from a bullish standpoint, if you have a bullish posture in the market, what you see is you see the bullish position. The whole key about what it is that we do when we're trading, when we're investing, the real secret is to always be able to see both sides of the trade. When you look at this image, the key is being able to see both sides of the trade. If I take this image and I go ahead and I break it apart, so now if I break it apart, it's the same image. I'm just pulling off some of the items out here. For those of you that didn't see the witch, now that I've broken it apart, can you see that this is the witch's nose out here? Here's a part of the nose. Here's her smile. You know, here's her hair. Here's her forehead. That this is really, this is how those folks that only saw the image of the beautiful woman, now that I break things just apart just a bit, here's the chin of the witch, here's the lips, here's the smile, here's the outside of the nose, the inside of the nose, here's her left eye out here, here's the forehead, here's some of her, with her hair, here's a little bonnet or something that she's wearing over the top of her hair. If I pull this apart, all of a sudden those folks that were only able to see the beautiful woman now see the witch. But you see, it was always there. And just like in trading and investing, the bullish side and the bearish side is always there. And when you're trading, it's incumbent upon yourself to be able to see both sides of that trade. If you can see both sides of the trade, that's going to make things much easier for you because you're going to have these lines of demarcation. Now, maybe for those folks that only saw the witch and didn't see the beautiful woman, well, let me pull this apart just a little bit differently. So here's the same image. Now what I've done is I pulled the bonnet off of the hair that was on the witch. I pulled down, little, fluffy thing that was around her shoulders down here. I've gotten rid of the mouth. Now we've got the neckline of the beautiful woman. Here's her chin. Here's her nose. Here's her little eyelash. Here's her ears. Here's her hair, and this little feather coming out of her hair. See how you can see now, for most people that only saw the witch, now you can begin to see the beautiful woman. You see, they were both there. Seeing one side or the other doesn't make you more right or more wrong. But if you have what's called functional fixedness, which is what most people do, functional fixedness, the guy who coined that phrase and who developed it, Carl Dunker, I believe. Now, he didn't show this image. He showed something else, and maybe tomorrow I'll show those images as well. And it's really important because the pattern recognition, as it applies to life, as it applies to what you're going to do in your next moment today, whether it's something that you're going to be doing at work, whether it's a trade that you're going to be making in the market. Functional fixedness, if you are taking a position of a bullish move, that's a wonderful thing. What you now need to do is focus on, well, where is it that the bear trap is out there? Likewise, if you're taking the position of seeing we'll call the witch, maybe the bearish side of the trade, doesn't really matter, right? If you're just focused on one thing and you don't see the other, guess it's there. It's just like a rainbow. Even though you don't see it as you look out your window, it's there. All you need is just a shift in the clouds, a shift in the sun, a shift in some prismatic droplets of rain out there, and the rainbow's there. Nothing else has changed. So when we get back from this break, we'll go take a look at these markets, and we'll go try to get rid of our functional fixedness and take a look at where the bulls and the bears are. This is Steve Rhodes. This is TFNN. We'll be right back, folks. Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, Dow futures off 16, S&P futures off 3.5 points on Saturday, Valentine's Day out there. Hope everyone had a nice Valentine's Day. It happened to be a planetary index date, a P index day. We haven't had too many of them as of recent, but that's really based on the original work that Dr. Ruth Miller and that Larry did. That is the original P index date using that ephemeris that they use. That occurred on a Saturday. Sometimes those can mark a intermediate term top out there. So as we take a look at the S&P futures, we know that there was a high that was made on Friday. That high was 2,095. Yesterday with the electronic markets open in the futures pits, not the futures pit, but in the futures market, we saw a sideways move out there in the marketplace. Is Friday a high out there? At this stage, I have to say no. But it could be. There was a 3P index date. That's all that I know. If we do take a look at the ES mini, it has been traveling in about 126-point consolidation range. So what that says is any real break of the consolidation level with conviction, and Friday was a break of that area. Today you're trading just slightly above it. 2,088.75 is the number. If we see any kind of wide-ranging bar, any kind of accelerated volume out here, then the measured move, just like we were taking a look at inside of the FTSE, then the measured move would say you've got 126 points or more to the north of that. So that is one possibility out here. There is nothing out. In fact, let me just do this. let me take this chart out here. I talked about functional fixedness out there. I'm going to go ahead and just clean this off here just for a moment. Because, look, I remember going back many years. Some of you, everybody comes from a little bit different position with regard to their technical analysis skill set out there. Some are just listening to the show because they enjoy the entertainment, whatever entertainment it is that I might provide for you. Some folks used to listen to the show all the time because I would provide, different inspirational stories, maybe different metaphors for life out there. And I enjoy doing that. That's really part of understanding pattern recognition. Others are just beginning to say, hey, I want to understand these different technical patterns that exist in the marketplace. And even though I rattle off these different terms, A, B, C, D, consolidations, bullish, bearish, engulfings, whatever it might be, people are at different stages to try to understand. We're always trying to master that which we don't know out there. Now, I remember, like yourself, if you would just take a look at this stock chart out here, I remember looking at this and not knowing what the heck any of this really meant out there. And some of you may be at that stage. And if you are at that stage, this is a great place to be. Great place to be is also a subscriber of Mastering Probability, because it's not just about telling you what to do, what the markets are. It's about educating you. It's really about being able to grow and contribute. For me to help you grow, for me to contribute to you, so that you can be able to do all this stuff on your own. So all kinds of educational resources contained inside my newsletter service, Mastering Probability. Obviously, tuning in at TFNN allows us to do that. With regard to that functional fixedness, though, that I was talking about, when we took a look at the beautiful woman versus the ugly woman, the witch, whatever it is that you want to refer to it as out here. It's a great tool. I'm preceded. The show gets opened by John Logan, and John Logan's got a. So if you knew nothing, if you didn't know anything about A to B equals CD patterns, anything else about this, and you just understood the battle between the bulls and the bears, then just simply applying his market profiles. Here's the daily market profiles on a stock chart out here. This is for the ES Mini. This would assist you in your trade and investing as much as anything. It's a great place to start out here. Take a look at these profiles out here. These help you to identify where the bulls and the bears are. If you like movies out there like how about the movie Kingdom of Heaven? Have any of you seen the movie Kingdom of Heaven? Great movie out there. You got Balian, right? Who is trying to protect Jerusalem, against what's the Muslim leader's name out there? Way back in ancient times. But in any event, here's the thing. No matter what battle it is that you might see in life, and whether it's the battle that's on the stock charts, maybe it's a battle against a competitor, whatever it is, when you take a look at these market profiles that are on your screen, they help to identify the battle lines. You see the green line out here in the bottom of my screen. Let me just pull this back out here. This happens to be the line of support. This is where whoever is, this is one line of support. So this is, one team. This is the team on the left. The team on the right, happens to be the red line. This is going to be your area of resistance. This happens to be the bears. This happens to be the sellers. So you got the buyers at the bottom in the green area, the bulls. You got the red line being the resistance level and the sellers out here. Once either side loses, it certainly does tell you which side of the trade to not be on. And this tells you at this stage of the game to not be on the bearish side of the trade. Just using this as a technical tool is a wonderful thing. Boy, TFN is full of great resources. Whether you're a bull, whether you're a bear, get rid of that functional fixedness, folks. It'll make life a whole lot easier. This is Steve Rhodes, TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 32 points, trade out at 17, 986. S&P down 4 at 2,092. Composite off 6 at 4887. Russell 2000 is flat. DAX down 52 points. FTSE off 8 points. Gold is back $14. Silver down 89 cents this morning. Light sweet crude off $1.20. You got natural gas back a couple of pennies out here. Leading the charge the upside, it is none other than Z, our man from the Tiger's Den, Zillow. That's up 8%, up $8.76. You've got Starwood Hotels up $3, up 4%. Polypore International up 5%, up $2.50. Vasco Data Security International, VDSI, up 9% this morning. To the downside, boy, the VASC is out. The Vascular Biogenics down 53%. Yikes, down $7. Amazon down $5. YY Inc. off $2.50. The gold GLD Spiders Gold Shares Trust down $1.48. Let's go check in on gold, see what we've got going on out here. If we take a look at gold, one thing we know for sure is you got to pay attention to those full moons out here. These full moons, I've given you a pattern secret. I cannot tell you why it works this way. I just know that it does. And it works so well that it's one of these things that you can't ignore. This is, and that is a full moon. And a full moon has some type of initiation to get gold off of its Horse. How do you get gold off its horse, out of the saddle? It's an initiation move. The arrows point to this. Does it work all the time? No. Does it work a majority of the time? Yeah. What type of majority? High majority. 51, 49? No. 70-30? No. More like 80-20, more like 90-10. It is something that you got to pay attention to out here. What do we know about Goldilocks? Well, gold's been in this descending price channel. We saw the initiation move with regard to the full moon that came in on February 3rd out there. We've seen price push lower. I'm not so worried about the bottom of this price channel out here. More so paying attention to, the 1198 area as gold gets back there. Right now you're at 1211. Is 1198 mean that that's where gold is going to stop? Absolutely not. How will we know if gold is stopped at any of these levels? Well, one thing you would say is that you would see some type of bullish reversal signal. Since gold has made its high out here, made that little bearish engulfing candle that was on the trading session of January 23rd, had some follow through on January 26th out there. How will we know if gold has found a bottom? Well, you'll see a bullish reversal signal. We certainly have not seen that since the move down, since that top, since that bearish engulfing candle. So that says the initiation move. Now, we don't have another full moon until the early part of March out here. Does that mean that gold just moves down in that time period? No, not necessarily. The initiation move is where things just simply get off their rocker, so to speak. I suppose that's what I meant when I said get off its horse out there. Really was the rocking horse, the rocker. So 1198, if 1198 fails, then you're looking at about 1168 inside of the price of Goldilocks. So we go take a look at silver, see what silver is doing out here. Silver off 85 cents, trading at $16.43. This is the daily chart. We've seen silver have some pretty decent bars to the downside. That began back here on January 29th. Another bar here on February 6th, and then, of course, it has hit the bars right now, moving to the downside. If we take a look at its retracements from lows out here back on the trading session of December the 1st to the high out here, looks like right around January 21st, 22nd. That was at a price point of $18.50. Silver now below the 0.382 retracement level. That says what should we be looking for inside of silver? You'd have to say about the $15.81 level. You're at $16.43 as its potential next stop to the downside. We go take a look at light sweet crude. That's trading off $1.15 as we speak right now. What do we know about light sweet crude? Light sweet crude out here it continues to trade sideways. Right now it's above its market profile resistance level. That says that the bears, that the sellers that were selling at the price point of about $51.04 are not the ones in control. Even with light sweet crude trading lower this morning, if price is able to get back below that area, $51, then the sellers may have regained control. Right now, we just simply see consolidation up at the highs out here. This is a resistance. Resistance being the high of that February 3rd level. That's out at $54.24. Of course, real resistance is going to be that descending price channel. If we see gold if we see light sweet crude close above that level, then you're looking at the 0.382 retracement level. Takes you in like the $65 area or so. We'll take things one moment at a time. The question of natural gas. There's a question, an email that's come in that said, where do I see natural gas going to? Nothing has changed with regard to natural gas. In the case of natural gas, meaning its pattern out here, it has a pattern that is consistent. It's a pattern that you cannot ignore, or you should not ignore. You can do whatever you want, but I wouldn't ignore it, and that's the seasonal pattern. That seasonal pattern says, in the case of natural gas, its pattern is not necessarily based on the mere fact that if you watch the weather report and it says that it's cold outside, that means you're going to see a spike higher inside natural gas. This is a pattern over the course, I think, the last 11 years or so. We could have gone back further. I went back 11 years, and in a course of 11 years said that right around the week of February 14th, February 11th to the 14th, that natural gas makes a short-term bottom, then bounces higher. And that bounce higher takes you up into the time period. Now, we use these as into February 25th out there. It's possible that that's what it's doing, but even if it does that and it moves higher, this doesn't tell us how high it's necessarily going to move. But what it does tell us is even if you were going to try to buy into natural gas from a long-term standpoint, you'd have to say why. Why would you do that, knowing that the seasonal pattern says you come all the way back down to these February lows out here? And if we go take a look at the natural gas contract out here, what we see about natural gas, we see a little bit of a bounce, and then we see it just kind of hanging out down here at these lows. It says these lows are going to get tested again. The lows from February, the lows right around 250 or so. What do we know about natural gas if we didn't even know its historical pattern? Well, if we just come back and we take a look at the daily market profiles for the contract. We use, John Logan's great tools out here. You can see that it was winning the battle out here is really the sellers. The sellers were able to break through the support level of the bulls out here. That's the green horizontal line going across our screen. That's at a price point of $2.81. You can't really get bullish on this until you at least get the bulls get back in control, until the buyers get back in control, and you got to see it close above that level, 281. And if they do, then that says, hey, you got to be looking at resistance at around $3.03 out here. So what do we see inside natural gas? I say look elsewhere for a trade out there. Don't come back into natural gas. Don't be looking for any type of really decent play inside natural gas until the April timeframe out there. But that's based on playing a seasonal pattern. There's other tools. You can plenty of other tools to use out here. That's what's going on inside of natural gas. So we go take a look at the currency pairs out here. Let's go take a look at those. Let's look at the euro, Japanese yen. What do we see about the euro, Japanese yen right now? You know, we've seen I've got the markets right now trading a bit lower. You've got the Dow's off 59, the S&P's down 6, the Composite's off 11, the Russell's down 2 points out here. Okay, a P-index date on a Saturday. You know, there's a possibility, but right now when we take a look at the possibility of what? A possibility that the sellers are trying to gain the upper hand here. But when I take a look at what's going on inside the euro, Japanese yen, our good friend Lee Corso, he'd say not so fast out here, because this is the real liquidity gauge. And so is this nothing more than a smooth Michael Jordan head fake in the market out here? Well, at this stage of the game, I'm going to have to go to the answer is yes. That's all that we're seeing in the market at this stage, because there's a disconnection here. There's a disconnection that says liquidity is prevalent. When liquidity is prevalent, that says that liquidity just will go ahead and keep buying this lower price out here. You got this currency pair that is not at all conforming to the normal pattern. Does that mean that this has to play out this way? The answer is no. Nothing has to happen, but it is patterns that we want to pay attention to. And these are patterns that are important. Do I have functional fixedness and take a look at the euro, Japanese yen and believing that if it moves higher and our markets move lower, that one is right over the other? I don't think so. I don't think so, because I'm willing to go back and take a look at what historically that means out here. I've done this enough with each of you on the shows that we know that more times than not, what happens is, guess what? It's this currency pair here that is the one that's telling the real story inside of the marketplace. But that's not necessarily always enough. So we go take a look at the VIX index. We go take a look at the VIX index. We go see where it is traveling in relationship to its 50-day exponential moving average. Right now, it is below that level being 1735. 1735 is your 50-day exponential moving average. Right now, you got the VIX priced out at 1629. You get above 1735, and then the game changes. Then you can say, hey, liquidity is drying up out there, and then you come back and take a look at your other liquidity gauge, that being the euro, Japanese yen. If we go back and take a look at currency pairs out here, we look at the Great British Pound. We know the Great British Pound has broken out of a fairly long-term descending price channel out here. It's done it with some conviction. If we take a look at, any type of moves out here, there's now resistance. That resistance being not so much a key reversal day yesterday, more of an outside day, meaning the prior day's high and low was pierced to the upside and to the downside, and you had a lower close. An outside day and a bearish engulfing candle. That says that resistance is the high of yesterday. That's at 1.5441. Any close above that, price starts moving to the 1.58 level. That's what's going on inside that currency pair. Let's go take a look at what's going on inside of the markets out here. Let's go take a look at individual equities and how they're moving. If we go ahead and we take a look at Priceline, PCLN, that's up $23. That's up 2% out here. Pick your perfect stay at Booking.com. I don't see why this is moving, but what we do know about Priceline is Priceline is now broken through a descending price trend out here. This is a trend line that takes Priceline back to the trading session of August the 11th. If you use that high as its touch point out here, from a trend line perspective, that's at 1329.90. If you use as your next touch point the high from November 3rd, that's at a price point of 1229. Guess what that's going to run into? That's going to run into your swing point high here from December 29th. Priceline is now broken through that trend. Priceline is breaking its trend. If we take a look at retracements, resistance retracement from the high to the low out here. That low is going to take take us into the 995 level. We can also see at that price trend line, you're at the dead cat bounce, the 0.382 level, 1123. If somehow today Priceline's able to take that level on, do it with conviction, wide-ranging bar, accelerated volume, that'll say it's not going to let anybody off of the elevator. That'll say it's going to go make a run for the 1202 level. Likewise, this should be a place where Priceline lets passengers off. The question is, who's going to get on? Is it going to be people, sellers that are going to try to take it back down to the next floor, or is it going to be buyers that says, hey, next level up? 0.618. That's what's going on inside of Priceline. If we take a look at Zillow, we take a look at Z up $4.70, up 4% out here. Let's go see what it is doing. It's traded off of its session highs already. Zillow, as we take a look at it, it's got a trend line out here. Let's go take a look at its trend line. That trend line starting from the high of July 28th, that becomes our touch point. If we take a look at its next touch point out here inside of Zillow, that becomes November the 19th. We can see how well that acted as resistance. Guess what? Zillow's broken out of that level. It did it here on February 12th. February 12th, 3 million shares the upside. A little bit of a supply line that is dealing with, which was about 4 million shares from January 23rd out here. That's really all that it's really dealing with potentially. But what we do know about Zillow, it's broken above its market profile resistance level. It's broken a trend line. It's likely headed to its next swing point, which is from November the 19th. And that's anywhere from 120.65 to 127.89. If we go ahead and we take a look at, Starwood, let me see, what else? What do we got here percentage-wise? Vasco Data Security, I'm assuming that's what it is. That's up a nice 13% this morning. Looks like they were out with numbers before the bell. Revenue was 11 million versus 3.3, so that's a nice 200% beat on the bottom line. Revenues here, I don't see what the revenues are other than the fourth quarter was up 44%, so not too bad there. If we take a look at what this is doing, it's taking on a swing point. It's confirming an A to B equals CD to the upside in a big way, a big A to B equals CD by taking out the November 28th swing point. That high is $30.60. Only had volume of 614,000 shares, 1.9 million shares today. A to B equals CD. If we give you the small one, let's go give you the small A to B equals CD pattern out here. The small pattern is going to give us a price projection. Well, as soon as I can do it, come on. I know you can do it, Stevie. It's not really me. It's the tool. I had this problem the other day. Well, I'll just have to do it manually. The A point is about $16. The B point is 29. The retracement out here, so 16 to 29. That's $13 added to the low of 20. That says about 33.81 or so is that initial price target. That is, and there's a larger A to B equals CD inside of ticker symbol VDSI out here. Let's go see what is it that's moving to the downside. Well, to the downside in a big way. Vascular Biogenics. Looks like this thing has blown apart. Trading out at $6.35 as we speak right now. This was a IPO from back on October 1st, 2014. It's trading all the way back down to that area, which is a shame. It's too bad because this went from $5.85 up to about $17, $17.02 back on January 27th out here. And, trading all the way down, $6.30 out here. If we go ahead and take a look at what else is moving to the downside, you've got Agios Pharmaceuticals, you've got CoStar Group, we've got Amazon. Let me see, what else do we have moving here? Anything large to the downside percentage-wise? Percentage-wise, the answer is no. So let's go check out this one that's got $13 to the downside. CoStar Group. What are they? What's their? There's some kind of conference call going on. Looks like they're lowering their guidance and their stock is getting lowered too. Hey, this is Steve Rhodes. This is TFNN. Dow's up 45.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at Direction directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Right now, the Dow's off about 47 points. S&P's back 6. Composites down 8. Russell's off buck right now. Our man Basil Chapman's going to fill in for me for the next hour. I've got something I've got to take care of, and so he'll be filling in for the second hour of the Trader's Edge. He'll be doing 2 hours this morning, so make sure that you stay tuned for that. Of course, it is terrific Tuesday out there, so we've got the options hour after that. Then you've got Daryl Martin, then David White, Tom O'Brien, a full lineup today. Tom O'Brien from 3 to 5, and of course Andy Heck to take us home from 5 to 6. So the Dow's off about 39 points right now. If we take a look at levels of significant support and resistance, if I just take a look at the ES Mini out here right now, this is a short-term chart. This is a 10-minute chart out here. Let me put 30 minutes. Let's at least get some type of 10 minutes pretty narrow banded time frame out here. So if we look for levels of support and resistance inside of the ES Mini on the 30-minute chart out here, what you're going to see is if the level of 2085 fails, 2085.75 or so, price ought to move down to about the 2081 area. If you see price move down to 2081, if it's doing it not with accelerating volume, then you've got the Euro Japanese yen moving to the upside. That becomes a pretty nice buy area inside of the ES Mini. But you have to have those factors in place out there. If, in fact, we see price in the ES Mini get above 2090.50 out here, that becomes a level of resistance. Once you get above that, then you can expect your next stop to be 2095. And above 2095, then you're looking at 2090. Now, I'd say 3,000. No, 2,100. What am I talking? 3,000, 2,100 all together. So I would use those as my intra-session levels of support or resistance. You can pretty much mark those numbers, put them down on a pad of paper, and you can watch how the ping pong ball of the markets plays out today. Overall, where are we at? As well today. Again, if we take a look at the VIX index out here, the VIX index number you're going to be watching for today is 1735. You get above 1735, that's where a lot of damage can be done inside of the market. If I take a look at the summation index out here, this is the barometer as to who's really in control of the market, the bulls or the bears. If we take a look at the New York Stock Exchange, it is still the bulls who have the ball out here. You've got the price oscillator above zero. You've got the summation index